Hello everyone and welcome back to the channel, and I hope you guys are doing great. So in my today's video, I'm going to discuss with you about Equitas Small Finance Bank. We are going to go through their Q1 FY27 result and see how their turnaround is coming about, and discuss about the main important topics like CASA growth, the disbursements growth, where the net interest margin is going in. What is the status of the what do you call the GNPA and NPAs, right? So let's get into it. But before I get into disbursements and other things, we'll just look at their profit and loss account and see how well they have done. If you look at from their income perspective, right, it grew by almost 19% YOY from 1,071 crores to 1,280 crores. And if you look from profit before tax also, right? That also grew very well. Last year they had a loss of almost close to around 298 crores, and this year they made a profit of almost 244 crores. And the same thing if we look down at PAT also, right? They had overall loss of around 224 crores, and this year they made a profit of 185 crores. So this clearly shows, compared to the last quarter, last quarter one of FY26 to quarter one of FY27, right, the business has completely turned around and they have become profitable in the first quarter. So that's actually a good sign if you look purely from the perspective of how do you say, from the business making profit, right? So let's look into it, how other things are going on, right? See, one thing is, okay, the company made the profit in the Q1 of 27, but how are things looking forward from the disbursements perspective, from the loan growth perspective, from CASA, and the net interest margin and all those things. So let's look forward. So if you look from their disbursement perspective, right? So disbursement is nothing but the amount of loan that the bank gives out in the market, right, to the customers. So if you look from that perspective, but sorry, it grew by almost 93%. And if you look at over here, right, their majority, the biggest growth came from micro finance and micro loans, because last time Q1 of FY26, the loan was around 266 crores disbursement that they gave, but this quarter it almost increased by almost four times to 1,343 crores. So this clearly shows, right, that the MFI cycle is completely turned. So whatever the challenges were there, in the past couple of years, now it has almost settled down, and the MFI sector is picking up. And you would have seen my other updates on other banks also, right? We can see the same trend which is happening. So over here also, Equitas Small Finance Bank clearly shows, right, that the MFI cycle is literally turned around, and their loan amount that they're given is almost increased by four times to 1,343 crores. And the other business also did well. If you look at their small business loan, that grew by almost 51%. Housing finance grew by almost 77% to 550 crores. And if you look at the amount that they give to NBFC, as a loan, which NBFC in turns provides it to their customer, right? That also grew by almost 478%. Last year they gave a loan of around 135, and this year they gave a loan of around 780 crores. So this is also indirectly shows that MFI cycle is cycling, because we need to understand there are a lot of NBFCs, right, which sorry, which serve the microfinance industry. But obviously, for them, they require money in order to lend them, right? And generally, they raise money through equity or through issuing bonds. And the other option is taking loan from banks, right? So over here, if you can see that in Equity Small Finance Bank, now giving loan to NBFC also increased by almost close to five times. Last year they gave a loan of around 135 crores, and this year they gave they gave a loan of around 780 crores. And if you look at their gold loan also, it increased by almost 131%. So overall, if you look at it, right, the disbursements, I mean, are doing really well, because it almost doubled compared to the last year by growing by almost 93%. And especially if we look inside the disbursement, the MFI sector has been really growing well. And if you look on the other side, right, which is especially related to the deposit, that is very important, right? Because as I have explained earlier in my other videos when I've spoken about banks, right? See, the banks which give out loan, right, they do not have their own money. They get their money in terms of current account with people push money, savings account, retail term deposits. Through all that, they get their money in, and they lend it out to the lend it out in the market for the customers who for the people who need it, right? Over here, we need to see how their CASA deposits have grown as well. CASA has grown as well as the other deposits have grown. So if you look from that perspective, if you look down in the screen, right? So the CASA has grown to almost 12,307 crores at this point of time. And if we look compare, it's almost now 25% of the overall loan book, and term deposit, which is around close to around 36,700 crores, is around 75% of the loan book. So over here, the contribution is increased from CASA. And see, for any bank, the more the CASA contribution is, the more the cheaper funds, is accessible to them. So over here, it's decent. Not that I wouldn't say it's a very great, but it's quite at a decent number. And if we look at the other things, right? See, for a bank, in order to make money, right? See, they take money by paying interest, and they lend money, and they earn through that interest, right? So over here, if we need to look at the overall cost and how things are changing for them. If you look at the screen below, right? See, if you look at the daily average cost of funds, it is has decreased for the bank from Q1 FY26 to Q1 FY27 from 7.49% to 7.05%. That's a good sign. But and in the same time, if you look at the daily average NIM, and if we compare only from quarter, YOY quarter, right, it has done really well from 6.37% to almost 7.24%. But at the same time, right, the market looks what has happened in terms of the margin. Are the margins stable compared to the last quarter, or is it going down? Over here, that is the only little concern, right? Because if you look over here, the daily average net interest margin has gone down from Q4 of which was at 7.36% to 7.24%. The cost to asset is almost remained the same. And if you look at the ROA, right, return on asset, that has also done extremely well compared to YOY. Last it was around 0.18%, and this is around 1.18%. But if we again look from Q4 perspective, the numbers don't look that good. And if we look at the ROA, right, ROA is also the same story. Last year in Q1, it was almost negative, but this year has come back to positive to 11.76%. But again, from the Q4, Q4 FY26 perspective, it has gone down by almost close to 3%. So this clearly shows, right? Even though the bank has literally turned around from the last year, if you compare to a quarter in YOY, right? But in terms of the last quarter, things in terms of their overall net interest margin, the return on asset and ROE is not looking that good. So that means the cost is increasing, especially the cost of fund is increasing, due to which it is giving pressure to the NIM. So if anyone who is tracking this business or who is invested in this, right, you one need to track how the net interest margins are playing out. If it was just one off quarter and next year it improves, it's so it's the market will not react very badly to it. But if this continues going downhill, even if then it could be a big problem. And if you look in terms of the their assets, the GNPA and the NNPA, right, over there also, if you look compared to sorry compared to last year, Q1 of FY26, it has improved from 2.82 to 2.36%, and NNPA from 0.95 to 0.7%. Again, the challenges from the Q4 and FY26 and this QY comparison. Last quarter, they had around 2.49%. It has come down to 2.36%. The only challenge is on the NNPA, which is slightly increased from 0.66% to 0.7%. So again, we have to check out in the coming quarters how this thing pin up. Is it going on the increasing trend, or is it getting stable and coming down, right? So overall, if you look at the result of Equitas Small Finance Bank, right, the numbers are decent because the income grew by almost 20%, and obviously profit grew by almost more than more than 100 or 200%, because last year they did a loss and this year they made a profit. So they have literally turned around from compared to the quarter. And in terms of disbursements, the disbursements are growing really well, and especially the MFI sector, because their loan that they give to MFI sector has increased by almost 400%, and to NBFC is increased by almost 475%. So all those are good signs. But the only challenge and the only thing that needs to be tracked, which could become a problem in the near future, is the the overall cost of fund and the decrease in net interest margin and the ROA and the ROC, return on equity. So that needs to be kept. If they are able to maintain that and improve it, I think that's going to be a good sign. If you guys like this video, please do hit like and subscribe to my channel. Thank you and God bless.